What's going on, everybody? This is going to be a video on a secondary approach that seems to be working very, very, very well for me. It works on all time frames. Preferably speaking, you want to look for it on the 5 minute and then enter on the 1 minute. It's just easier that way. This has been working very, very well lately, and I'm going to share it with you guys. This is very easy, it just takes some time to get used to. It consists of the fib. It is something that you could use as a way to find where price can pivot from. Okay, what you're going to want to do is, after you determine your bias, is if you miss or you have moves like this that are completely out of like our control, and let's say you just don't have anything that aligns with an entry for you because you just don't want to take a random trade because you have this, or whatever type of trader you are, conservative, you just don't want to feel like you're chasing anything, this is definitely perfect for that. So when you have a move like this without any interruptions of the opposing candle, meaning like if we have a leg down and we don't have any opposite candle be placed within the leg down, you're going to want to fib that. So being that this is the whole move down, we have this interruption right here. So we would use the next one. And as you could see, the next one is here. These are the fib settings. Okay. You could have used this one. In this case, this is the detail that I've been trying to iron out here. If we can use this, being that this is a completely new leg down, this is the lower move down. This is something that I'm still working on, but it seems to work well. It's just as long as like it's a continuation and it's a move down. Let's see something really quick. This is the total move. Would this have made sense? Yeah, you see, that's why it wouldn't have made sense. Anyways, what you're gonna want to do is when you have a leg down, I'm pretty sure this day we swept a 10 a.m. low here from the previous day. Yeah. After having a drop like this, obviously, once we sweep a major important liquidity out, that's where price seems to like reverse from. And also, where strategy is based on an 8.5 entry. So when you fib this one out, yep, straight to the T. Higher time frames on the 8.5 is obviously from wick to body. As you can see here, we sweep out, we tap into here, sweep out 10 a.m. We have an 8.5 time frame alignment for the 1 hour is the 5 minute. Price sweeps it. We missed this leg, let's just say. Price trades back into this leg. You're gonna want to do is find. You could use all three of them, preferably speaking. The max expansion of 706 to 79 is the most max we can get out of it. We would like to stay between 0.5 and 0.6, but price can go up into here. There just has to be perfect PD arrays. So in this case, this is our PD array. Oh shit. Price taps into it, rejects it. So I forgot my login for this. So I have the ads and stuff. I can't use the rewind button and all that bullshit. We get a sweep of the high after tapping into this PD array and the leg mark out. 8.5. Tap into a 5-minute PD array. We have the high that's swept with the bearish candle. As we already know, we like to use the change in state of delivery. Enter here for shorts to trade back down. Could target this PD array. Could target this PD array. Or you could even target this. I would just keep it at these obvious draws of liquidity. It's late in the day. I mean, you would think that price would sweep this out, but in this case, this is fine. You could use a 10-point stop. After entering on the retest. Boom. Perfect trade. Either way, this is our first approach. Obviously the 8.5, but let's just say you missed it or you weren't too sure about it. We have that major leg down. Price trades into it. Overall trend is bearish. You can catch a short again just in case you missed that trade, initial trade. It's one way to look at it. That was on, what was this? This was Thursday. Another trade here was, pretty sure, on the 1 hour for today, which is Friday the 27th. We have this giant move down. Price comes into the, like I said, it can. Let's just say we were to use this instead. See, price comes directly into the 7.9 area. Taps into a rejection wick. Time frame alignment. You have 9:30 open, rip to the top. Price taps into the 1 hour rejection wick. Our entries based on the 1 minute entries. Price taps into it. After rejecting. And boom. Could have entered on the inversion. We swept out these equal highs. Tapped into the 1 hour rejection wick. And we tapped into the 7.9 of the fib. This would have been a clean catch for, how many points is this? Say you were just confident enough to trade into that. I would have targeted these lows here. It's 97 points. 10-point stops. So 1 to 9, almost 1 to 10. It's that simple. So, just a quick reminder on how to do it again is marking out the leg, especially a leg like this. Price tapping into, preferably, here's a perfect example of why you wouldn't use any of these, because when you fib this out, there are no PD arrays above 0.5 and into 6. So it just got to point, it got to stand out to you. Like, that's how you know which one to find. Once you have this marked out, you go to 1 minute for your entry, so you're not just aiming at anything. And you look for another entry within the PD array. In this case, like I said, this example was the high gets taken out and closes bearish. So the candle closure of that candle that takes out the high, once you get candle that closes underneath it, you want to enter on the retest. Here we had 1 retest, 2, 3, 4 retests before breaking down. And it's kind of self-explanatory after having such a large move down like that. Price is going to try to rebalance something within that leg down and continue either going down further and then reversing back up before going back down. It's just kind of easy to find when you have like such big moves like that, instead of just looking for a random PD array and wondering why price is not trading into them. I just feel like this is way better. It's gotta stand out obvious to you. I think there was one on Monday on the 5-minute. Let me see. Is this Monday? No, Tuesday. Yeah, you have the PD array sometimes goes a little higher. Sometimes it could give you a gap fill. You know, just about close to a gap fill. So annoying, this thing. For the 1-minute. For the 1-minute, we have. You could even use PD arrays inside the 1-minute as well, if it's just a little wild, but preferably it's the 5-minute. We have this rejection wick right here into the 0.5 in this fair value gap. You get the CE top. You have this high, 945. $140-point move, just based off of the secondary. And then you could also fib this out. Okay, it's too far of a move. Nope, yeah, price comes to it. Wait, let me see something real quick. No, price doesn't end up coming that high. Okay, cool. But yeah, it's very simple once you get the hang of it. Let's find another one. Boom, we get a gap fill, 0.5, 0.6. Price trades into this leg before trading back down. The 1-minute's probably going to be too far for me to go and find an example. The data's too far behind. Oh, no. Okay, in this case, this is the high. What can you find here? This is the high that taps into this gap. Is this a high? I'm pretty sure this day had a SMT here between ES and NQ. Yeah, this would have been a tricky one, because this is the last high. This is the last low of the series of candles that basically put in the high. So to have a change in state of delivery, candle would have to close below here and retest here, but it would have stopped us out. Oh, no, we would have been fine. That's crazy. Could target these lows. Targeted that low. This low. Yeah, would have got. You would have missed it. You would have been edged. Trail. Let's see something. Yeah, 4.5. Remember, guys, like I said, 4.5 kind of acts like the 8.5, just depending on what's around it. You use time frame alignment, see why you would have exited there. What's over here? Yeah, it's probably another SMT here. But either way, 4.5 would have been fine. You had almost 100 points, 100 plus points just sitting there. Let's find another one. What's this? Thursday? No, it's this Monday. $15 gets a little annoying. It's a little choppy. Let's find another example. I do that one already. It's another one that's a little annoying. Price ended up just disrespecting everything. Guess, no, I wouldn't use that one. Yep. Price takes out this high. Wicks above the CE. You have this low here. 5 minutes probably not gonna let me go back this far, but you get it. 0.5, 0.6 from here to here. That's the gap. There's no gaps above here. Price starts here, finishes here. 0.5, 618. Price goes into it once, taps to 0.5, fails, goes up above, high, sweeps it, taps back above the CE, displaces lower. It's just things like that. Like, they kind of make it obvious. What do we have in here? Nothing. 5. Maybe. No. Yeah, you just got to keep looking around. Like, whichever ones like are kind of obvious. Sometimes they're not. Like, this is all garbage. You would have gotten chopped. You just have to be like spot on obvious. January 29th. Boom. There's no gap here. Price fails, closes. I like to wait. This is just me. I like to wait for price to kind of like either go above the CE of a fair value gap, especially this one as big as this, because to enter here is just, I don't know, it's not enough. Like that's a lot, that's a wide range of price being able to figure out what it wants to do. So I kind of like wait for price to either go above or tap the CE. In this case, we trade into the 7.6 and the 7.9. You have this gap. Price puts in a high. Sweeps it. Heads back down. And eventually ends up taking out the low, putting in a new low. Same thing. Shooting back up. In this case, nothing. Price never came back into here, just displaced lower. Same thing here. Price never came back into this area. Mind you, this is the 1 hour chart because I forgot my login, so I don't really have the replay account. The phone's not, it's not going to show me that much data. Okay, let's price trade back into here. We have this gap here, I guess you could use. Price rejects 0.5 between 0.618. Price taps, rejects, displaces, lower, opens, tries again. Is this the CE? No, this is above the CE. I can't even go to the 5 minute. Let me see. No. Yeah. Then I gotta find my login for this. But anyways, guys, you get the point of it. So, oh, by the way, let me just show you the settings. You guys can screenshot that and use it. Yeah, so like I said, you want to have a big displacement either up or down, and you want to mark that out without any interruptions, and find what PD array matches with price. The max expansion, like I said, is 7.9, and in this case, when you have candles closing like this, I mean, you could have caught this one for a slight move down. Price taps to CE, heads down a little bit. You could have caught, it wouldn't have been much, but you could have caught a couple of points down. What am I saying? It couldn't have been much. That's a lot, to be honest with you. Obviously, after the move is, picture it from this perspective. It's still a lot. It's 93 points. You don't need that much to really make a substantial change. 5 micros during New York session is going to make you, for 93 points, you're going to almost make like $1,000 on a funded. I don't know. Usually on Apex and stuff like that, like you can't go above that anyway, so it's kind of pointless. Here we got another move here. Is it this one? Okay. First trades. What do we have here? I guess you could say a gap fill. Taps into the fair value gap, I guess. Rejects it. Goes back up above. Sweeps these highs. Trades lower. here we have this move. Price trades into this area, 618 to 706. Rejects. Could have entered here. To get targeted these highs. 10-point stop. Same thing, you have this move. You have this gap here, this gap here. Price misses that one. In this case, this would have been a tricky one because price literally filled the whole gap. I guess you could say it's a gap fill. These are very important too, by the way, gap fills. Gap fills are very, very important. Price rejects massively. You could have even entered here because of how much it rejected at an important area. And then as you could see, it goes all the way up. It targeted these highs. But I mean, who's gonna hold the trade that long anyways? So I mean, these stacked highs would have been perfect enough. Let's say you entered here, 90 points. Boom. You get it. I hope this makes a lot of sense. Let's see. Is price coming into this area? No, not at all. Okay. It's fine. That happens. This has got something to do with news. Kinda can't control that. You just have to be like really massive. Like, it's just gotta make sense. Sometimes you won't get any displacement back into it. At least not right away, if that makes any sense. Look, this was the same day, but later on, I guess, different session. Price comes into the 618 area. Do we have anything here? Maybe on a different time frame. Utilize your time frame too, by the way, guys. A lot of people could just get stuck on one, excuse me, on one time frame. It's like what you don't want to do at all. Gap fill. Boom. Gap fill. High gets swept. Closes bearish. Wait for a candle closure. Enter on the retest. Get out of here. So annoying. 10-point stop. Target these lows. Target that low. 139 points. Who's better than you? Oh, just based off of the secondary. I hope this makes a lot of sense for you guys. It's been like the best thing I've come across in a very long time. But nothing beats the 8.5. But yeah, that's all for that, guys.